Hello? Ah, boy. Having an issue. I might have to direct everyone to the YouTube. Music from SoundCloud. Just want to be able to talk. Yeah, YouTube sound should work fine. I can't click that button on the VTF that turns my microphone on, and I have no idea how I somehow accidentally pressed it this morning. But there's the YouTube link. Trade117 posted it. I got to get this started with this disclosure so we don't upset the compliance department. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRECIPIC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. What did I add on here? Oh man, I gotta say, it was painful. Painful even typing SIVB into my position disclosure. Like, do I have to type in SIVB into my position disclosure if it's worth 0? does that count as a position? But we better not mess with the compliance department. So it's always better to err on the side of safety with what will probably turn into my biggest day trading loss of my career with that SIVB when they officially make it a 0. Assume that happens. I don't know if anything ever updated this morning when Pat was posting that JP Morgan and a few banks are still looking at it. But in my brain, I'm counting it as a 0. I'm back in Roku. I'm back in Snap. I got out of shop into the close. Still got that PDD short. Let's go over the charts. Thanks, Brian. Let's go over to the charts. All right, how did we close today? Looks like we bounced a little bit from the close because the SPYs right now are showing flat, but we closed down. So it looks like we bounced a little bit from when we actually closed. So small down day for the SPYs, currently trading around flat. Decent update for the Qs. The relative strength of the Qs is just amazing compared to the IWM right now. And the IWM down 1.5%, still somewhat of a bloodbath, obviously being negatively impacted by your CREs of the world, your banks that are out there that are pretty big positions for the IWM. Okay, let's talk about our market technicals. And then we'll talk about our morning game plan and how we did and all that good stuff, and a little bit of current events with what's happening. But start with our big picture market technicals. We were extremely oversold pre-market this morning when we got down to about 380 pre-market in the SPYs. And I was, pretty aggressively buying into that. I know Pat was buying into it. Josh was buying into it. The morning meeting I was talking about, you really got to come in and buy. We hit that $10 plus of extension this morning because of all that news. I was actually really surprised that we traded negative at all today, especially when we sold off pre-market. When I first logged in, we were actually green. It just shows you how much volatility there is. Let's go over to the 5-minute chart real quick. When I first logged in this morning, when I woke up and logged in, we were green or flat. We were green a little bit. And that was well off highs. Pre-market highs, we're at 392 or so when the market first opened. Futures were up a lot at one point. Going into the morning meeting, we were at 380.50. This is a $12 downward move in the SPYs, all pre-market. It's sick. Even from when I was logging in around, I don't remember, 6:30 or something like that. We had this pop. We were green. We were looking pretty good here at 7 a.m. and then really sold us off heavily into the red, which, again, I personally was very surprised about given my interpretation of the news, but the market's smarter than I am. So I was heavily buying into this move, though, because of my thesis, my thought process on what all this means, which I'm happy to discuss in a minute, and more importantly, where the technicals were located in conjunction with that. SPY ADMA on the daily chart as of right now is at 393.40. And again, the intraday low is 380.65. The pre-market low, I think, is even a little bit beneath that. You know, closing in on that key 380. So we had a solid $13 or so of extension at lows, which is massive. That's really right in that sweet spot. That, you know, anything past $10 away from the ADMA has really been a very consistent signal for us to look the other direction. And as we approach 15, which really has not happened very much at all, even in the depths of our bear market. I remember one of the worst scenarios was the day that Russia invaded Ukraine. I just want to see that. This was, I think the biggest or second biggest extension. This is also when the market was at a higher price. But that low that day was 410 when the ADMA was at 433.80. So yeah, that's I think the biggest example of extension. But outside of that, and that was obviously immediately bought up. I remember that day doing the morning meeting, the day that Russia invaded Ukraine, and telling everybody that was a massive buying opportunity. It was the same thing, just that massive degree of extension. It doesn't happen a lot, but when it does, it almost doesn't matter what the news is at that point. It's really been very consistent as far as opportunity for us to go the other way. And today it was as well. It doesn't mean it's not scary. Oh, it does not mean it's not scary. It was certainly scary. It was scary these first 15 minutes of the day when we were holding down in that area and not breaking up. But I think Pat mentioned it. I was talking about it too. I'm sure there was some forced selling going on. I have very often seen on these really big extension days or really big gap days where there's massive extension after like a multi-day move on the downside, that you will still see 15 to 30 minutes of some degree of panic selling in the beginning of the day that's coming into the market. And again, I think that's a combination of legitimate panic selling and forced selling. So this first 15 minutes of the day here was tough. You really had to be very tenacious, I think, with your process of understanding markets and technicals and extension, and for me, my thesis, to stick to that long side of the market. IWM was even continuing to dribble to new lows on those first 3 5-minute bars. Qs made new lows in that second 5-minute bar, though that's obviously where a degree of relative strength was. So you really difficult. You had to be very tenacious to come in and buy there. But the market was signaling to do it. You know, the SPYs were at that degree of extension. The IWM is massively extended. I was saying earlier that I think $10 in the SPYs is like roughly equivalent of like $6 of extension in the IWM. Yet the IWM was about $10 extended. I don't even know if I've seen that before, at least in recent history. So the ADMA at 182, the low of the day at 171. Yeah, $11 of extension at lows for the IWM is massive. Look at the volume on today's trading session for the Russell. Holy cow. I want to compare that actually with the IWM on the day that Russia invaded Ukraine to see what that extension was like on that gap down at lows. It was the same similar situation. IWM 188, ADMA 199. So on a percentage basis, because it's $20 cheaper, this ETF now, this is the most extended the IWM has been to the downside, I'm pretty sure, since our bear market has begun. I'd be curious to know how far back you actually have to go to see an IWM that's as extended as it was today at lows. And this has been like one of the most interesting things about the technicals is the difference between the IWM daily chart and the QQQ daily chart, which we'll take a quick look at. Q daily chart at highs is in equilibrium. There's no extension to the downside at all at highs. Obviously at lows, it's a very wide-ranging day today. At lows at 285, you've got $7, $8 of extension. The Qs are like the SPYs, where it's really that $10 plus of extension. The Qs never got there. That's just because of how much relative strength there is. So that, if anything, that could actually have made you a little bit more nervous that we could have seen even more selling earlier today, because it's like, yeah, you got the extension signal from the SPYs and the IWM, but we did not have confirmation from the Qs. The flip side of that, again, is the consistent relative strength that we've seen in the Qs. Plus, I was calling for an actual flight to safety trade in mega cap tech. I particularly mentioned Apple in the morning meeting today. They just have so much cash on hand, and that's, you know, the safest thing out there, I guess, right now, or in this extremely fearful market, is having cash or gold bars buried in your basement somewhere, buried in your backyard for the real end of times. I sure hope you're right there, John Lee. Anyway, so that's kind of the big picture technicals of the market that had me thinking the long side. I personally combine that with a thesis, and I always trade best when I have a thesis that coincides with the technicals. And my thesis is that this sell-off on this market is generally overblown, unless, you know, a real catastrophe happens where there is a full loss in faith on the entire currency system and how everything works. And if you want to really see what that from, they're always the worst case scenario company. Totally blanking on the name of it now. I'm trying to check Pat's note. These guys. Zero Hedge. That's what I'm looking for. Zero Hedge. So you can check Pat's note if you really want to read what a worst case scenario would look like, but that would involve a complete and utter losing faith of the banking system as a whole. But yeah, so my thought process as far as the thesis goes for today is I think that the mixing this into the downside, unless that absolute worst case scenario happens. But, you know, so far, at least in my career, I've never seen that absolute and utter worst case scenario happen where we go to a barter system and currency which is not backed by anything no longer exists. So as long as there's not a nuclear bomb that's going off in the United States, or, you know, a currency that's backed by nothing except for faith and hope and trust eviscerates, then I think that this is a buying opportunity. It's really my thought process. The government is coming in and they are going to backstop every single person's deposits at every single bank. The major banks, despite potential mark-to-market losses that they might also be incurring on their treasury holdings right now, are still so extremely well capitalized that I actually think that the major banks most likely come out ahead out of all this. I still don't understand why no one has come in and actually bought out this SVB bank. It just makes so much sense to me, and I'd like to know, and I was trying to briefly figure this out today. So HSBC is buying the UK version of this bank at a token £1, right? But that bank is, the UK version is significantly smaller than the US version. So what's the token amount for SIVB if someone were to come in and buy it? This was just a $280 stock a few trading sessions ago. Is it $30? In my brain, from the little research I've done, that would actually correspond pretty well. The number could easily be less than that. I really think that the United States government does not want a buyout of SIVB because a buyout looks like a bailout. Yet, the government is bailing out every aspect of this bank run on every side. The depositors, other future creditors of other banks. You know, if they had this, what's it called, the new program, the BTFP, if they had that in place last week, then SIVB would be back to $200 by this point probably, because they could just, you know, it's just a short-term liquidity crunch, and that's all that this BT. I keep in my brain saying buy the F and dip. You know, everybody knows the expression. That's how I keep remembering the symbols of the acronym, because it may as well be. That's what the Fed's doing. They're just coming in and buying the dip, right? So BTFP, if that existed, then this thing wouldn't even be out of business. So they're coming in. This is for all intents and purposes. This is a bailout for sure. For sure, this is a bailout for everyone that's out there except for this SIVB bank itself. And I just don't see how no one comes in and buys it. Like, I'm looking at that purchase that HSBC is doing, which again is a smaller scale to the American version of the bank. That is such a win for HSBC. It is such a win for them as a bank. They're coming in, and for pennies on the dollar, they're getting a piece of a great institution that has been consistently profitable year over year, that just had a little bit of a liquidity crunch, and they are now, HSBC will now have access to, if you want to call it this, the Silicon Valley of the UK. And I know in a lot of ways we, say Silicon Valley is almost a negative these days for political reasons and for everything else. A lot of people do that. But you can't deny the fact that that in many ways is the heart of innovation of the world. That's where this all begins, right? All of the innovation that we're seeing that's bringing the world to the next level, whether it's this artificial intelligence, which is the big, rage right now, or robotics, or whatever it is, it all comes back to, venture capital and Silicon Valley and things like that. And for HSBC, they just were able to come in and buy a very profitable business for pennies on the dollar, and they are now going to have all of these relationships with the UK Silicon Valley. In other words, every time someone needs to do banking relationships for these new banks, it's probably going to be going to HSBC. There's so much value to that for a bank that I just don't understand what's going on. I'd love to be able to see, what's going on behind the veil here in the United States as far as the politics and everything else that is not allowing somebody to come in and yet make a purchase of this SVB. And it still seems to me like the FDIC jumped the gun on this. I mean, I get it, come in and say that they, are there to back everyone, but they could have come in and said, hey, we're here to back everyone if we need to, without putting it in receivership as quickly as they did, in my opinion. They could have let that stock trade on Friday. I hope not. They absolutely could have let that stock continue to trade on Friday, and they just didn't. Let me turn off the screen here on my actual VTF and see if that helps. Probably need to restart my entire computer. I'm having some sort of issue. Oh dang, I don't want this one to be laggy. I want everybody to be able to hear me. So anyway, that's my thought process on it. But when I'm looking at these stocks, KRE scares the heck out of me. Man, my internet's really lagging right now. I can't even get a chart to come up for this KRE. Of course, this is going to happen today. This has just been the luck I've been having these last few days. There it is, KRE. KRE scares the bejesus out of me. Is that the expression? Because I really don't know how this is going to turn out. There's a real world where people lose faith in these regional banks, and everyone does business with a major bank going forward, which is part of my thesis on why this XLF on dip buying opportunities is an opportunity. These major financial institutions, I don't care if they have these paper losses right now on their balance sheet. First of all, they can probably afford it even without the government backing them. And secondly, the government's coming in and backing them. This is already a bailout for JP Morgan and Morgan Stanley and Goldman Sachs if they own treasuries, because they can go to this new facility and they can get the par value of that paper in their hands pretty much immediately. So I have no idea why the major banks would be selling off at all on this. I think it's a buying opportunity. There's a very real chance that not only did these come out of this situation unscathed, but they come out of this situation even bigger and more powerful than ever. That goes back to what I was saying earlier about Goldman Sachs or JP Morgan or somebody coming in and actually buying SVB. It just makes so much sense for their business, and it'll make them bigger. But maybe that's what they're trying to avoid. You have to have Fed and basically government approval for JP Morgan or Goldman Sachs to come in and buy out this other bank. And they might just be saying, I don't want to do that. But yeah, it makes it even more too big to fail for sure, and in my opinion makes these a buying opportunity. And then same thing, I don't understand why, let's just use Roku as an example, and this is what I was saying in the morning meeting today, and obviously it worked out great. Roku is my third best name today. Roku's got 26% of their assets at SVB. On Friday, that's a concern, because you don't know. On Friday, all you had was SIPC insurance of $250,000. Doesn't cover the $500 million that Roku has at SVB. But by today, it sure did. So if anything, this company, there was a lot more fear in my mind on a Roku or any of the other, smaller startup-style tech companies on Friday than there is today. These guys are going to be made whole. There's no reason why these names should not be trading at the prices that they were trading at early last week, in my opinion. So that was my thought process. I'm going to come in and I'm going to buy the dip in Roku. I'm going to buy the dip in Shopify, which has some exposure. Shopify was a really good trade for me. I'm going to come in and I'm going to buy this dip in Apple. Apple's got enough cash where they could buy SVB if they wanted to for pennies on the dollar. I mean, they could add it to their Apple Pay maybe. That could be a business opportunity. I don't know. So I want to come in and I want to buy Microsoft. That was entirely the thought process today. I want to buy XLF. Honestly, the XLF names was probably the worst buyout call that we had of things to come in and buy, as far as how it is, at least by the close today. These things did not really hold up extremely well, and they did not close extremely well. But that was my thought process. The technicals confirm it. All of these companies, all these tech companies, it doesn't matter if they have exposure to SVB or not, they're all going to be made whole. So their business is unchanged. The major banks, they're going to come out of this unscathed, if not better. The bigger issue is these smaller banks, where there could still be a loss of confidence in those banks. And we'll see how that plays out. So if you came in with that thought process and you were aggressive like I was, today was a really good day for me. It was a really good day for me. It's a far cry still. I still have a lot more work to do to make back the loss if this SIVB is 0, because I got stuck in that scalp pre-market on Friday. Was not planning on risking 6 figures on that. I thought I was taking a trade. Also did not think, when I was trading that thing in the 40s, that all of a sudden they were going to halt it and make it a 0, which still doesn't make any sense to me. And I get annoyed when I saw Pat posting that information that the bonds are trading up. People are buying up those bonds because they think there's some value there, but yet I can't get a market for myself in this SIVB. If they left this thing open on Friday, I think it would have traded decently at one point when those other regional banks were rallying, and I would have been able to not only get out of SIVB without a loss, I think I would have made money in it. But it is what it is. So it made for a really good trading session today to kind of have the tenacity to recognize this stuff and come in and buy the dip. We got a great bounce off of it. We had a pretty weak close. I was not happy with today's close. I was actually surprised that we didn't rally further, was my biggest thing, to be totally honest with you. I really thought we were going to rally even further. I thought that we would have all of these markets above Friday's high today. SPYs not only couldn't get there, but they closed weak, flat red with a pretty heavy afternoon sell-off. The Qs got to yesterday's high, closed a little bit weaker. The IWM also closed with a big upside tail. I would attribute at least part of that to the fact that we have CPI tomorrow. I think tomorrow's CPI is extremely important. I've been hearing a bunch of chatter about does tomorrow's number matter given what's going on with the banking system, and my answer to that is I think because of what's going on with the banking system, that tomorrow's CPI is more important than ever. We need inflation to be coming down. Why do we now we desperately need inflation to be coming down. We needed it for a while to come down. Now we desperately need it to come down. Why do we need it to come down? Because the Fed here is potentially losing one of their tools. Right? What are the mandates of the Fed? Inflation and jobs, basically, right? To not state it scientifically. And what are their tools? Well, their main tool has always been interest rates. Increasing interest rates, tighten things up, bring down inflation, doing the opposite when there's a recession going on to help stimulate the economy. They've invented more tools for themselves, obviously, since the financial crisis happened. Other ways that they can inject liquidity into the market, bond buying and things like that. Since the financial crisis, those have come into play. But the number one tool for the Fed has always been the ability to raise interest rates. So what do they need to do to fight inflation? They need to raise interest rates. What happens tomorrow if CPI comes in super hot? They need to raise interest rates. How can they raise interest rates if it's breaking the banking system? So you're potentially hitting a point here, and everybody's been chatting for over a year, and I kind of was too, to be honest with you guys. Everybody's been chatting for a while. It's amazing that the Fed hasn't broken anything, and I've been saying that too. I was like, wow, like I had in my mind before last week how impressed I was with the regulation that we put in post financial crisis, that we're able to raise interest rates in such a historic way over the course of the last year and yet haven't broken anything. Well, we hit the point, we broke something. All right, we broke something here. So, yeah, I still think the 25 basis point hike is on. I still think that they're going to stick to that. I think they have to. But the higher for longer maybe is starting to go out the window a little bit. And we started to see a little bit the Fed funds actually begin to price in cuts again for late this year, which have been totally taken out of the market. And earlier in the year, at the end of last year, when they were trying to price in cuts for the end of this year, I was like, no way. How like, that's crazy. It's going to be higher for longer. But now I'm like, okay, if they're really starting to break stuff, then they might not do as many hikes as I was thinking that they would do a week ago, though I still think this next one's going to be a quarter basis point hike and possibly the one after that. They might not do as many hikes as I thought maybe a week ago. They might not keep us up there for as long as I originally thought either, because they're breaking something. But what do they do if CPI still comes in super hot? We totally screwed. That would be like the worst case scenario, the worst thing that could happen from the Fed's perspective would be that they're breaking the financial system with the amount of hikes that they've done, where you're having to now create all this additional government intervention, and at the same time, CPI starts ripping and getting out of control. That's a really bad and scary scenario, in my opinion. So I think, if anything, that CPI just became significantly more important tomorrow and for the next couple of months here. So we'll see how that plays out. I'm a little bit nervous about it, but I think that attributes to some of the sell-off into the close, honestly. But I'm optimistic that this number might be okay. One of the things that has me optimistic is that the whisper number is already hotter than the actual expectations, which I think is 0.4% month over month for both core and kind of standard CPI. But we'll see how all that plays out. And that's everything from me on my thought process today. Again, ProDesk, VTF, crushed it with the morning meeting and the game plan from this morning, coming in and looking to buy this market up. And we did that, and it probably would be very easy to come in and just have fear take over your senses and be thinking short off the open. It was the wrong idea. We bought stuff up. It was a very profitable trade to do that. So shout out to the ProDesk. You guys rock. And that's all I got. So I'm happy to answer any questions, whether it's in the VTF, which I'm not broadcasting into because I'm having an issue, or on YouTube. We got a bunch of watchers here on the YouTube. Maybe we can get to a all-time high of people smashing the thumbs up button in the YouTube. So if you're listening through there and you're in there anyway, you might as well give me the thumbs up and help me out. All right, happy to answer any question you guys have. I'll start here in the VTF to see if anybody posted anything, but feel free to post the VTF, YouTube, whatever. All right, scrolling through here. Seeing some cool comments from John Lee. Every company with large deposits should have a team of analysts studying the banks where they have deposits for type of counterparty risk. That's not something a startup would normally focus on. Yeah, John, and that's a problem, right? That's a problem. And that goes back to my thought process on why the big banks are going to get bigger. Because if you have to now run a credit check on your bank in the same way your bank is running a credit check on you if you're taking a loan, you're basically giving them a loan you put in a deposit. Is anyone going to do business with any bank that's not one that has $1 trillion in assets on the books? Probably not. Or pay a premium to big insurance companies to augment the 250,000 FIDC coverage, FDIC coverage, if they think that this new fund will not always cover their entire balance. I like that idea. Bringing in some private market insurance on some of this stuff, but scary. Thanks, Mike Reed. So not seeing any other questions there on the VTF chat. Let me take a look over here at the YouTube. What's up, Robert? What's up, everybody? From Sebastian. Do you think trying Tesla today in the first 5 minutes of the day for an RDR versus the opening low was too soon? It broke yesterday's lows slightly, but no continuation. So Tesla was actually one of the few names that I was warning against trying to buy this morning, and that was specifically because of the downgrade. I just thought it might underperform because Tesla got downgraded this morning. With that said, it kind of looks like the chart of the Qs here, so it traded fine, I think. Let me reread what you said. Trying it in the first 5 minutes of the day for an RDR versus the opening low was too soon. Yeah, it was hard. If you were buying in like the first 5 minutes, you had to be giving some real space. And that was one of the things I said in the morning meeting was expect if you're buying things off like early today that you probably have to take less size and give a lot more space risk if you're just kind of trading based off of my thought process. And then I said, but maybe with a little bit of patience, we'll actually be able to get a signal. What you couldn't do today was just kind of buy heavy with no signal. You either needed to be buying small and giving a lot of space, which is my initial process, or waiting for an actual signal to get size. I think the signal to get size is the inside 5 and up on the third bar there, the third to fourth bar. So if you're just buying it off the open, just buying it versus like an immediate opening low today, you could try it. I mean, again, if you go back to, I already referenced it, if you go back to the day that Russia invaded Ukraine, the low of the day was in like the first 15 seconds of the day. Like we opened, the low was in, and we just shot up, and that was it. And you bought or you didn't. And that was a really good day for us also. So I could see having that thought process and just trying to really buy it and like immediately off of like a very quick opening low and seeing if it can go. You have a very high shakeout risk is the problem. So maybe it was worth, now that I'm looking back on hindsight, my game plan was buy small, give a lot of space, wait for a signal. It may have also been worth it to buy big, early, tight. And again, you're risking getting stopped out of that and shaken out of that and having it still work. But if we had a similar situation to what we saw with Russia-Ukraine day, then you would have a lot of stock from amazing prices. So that's kind of my thought process there. Your follow-up question is also, what do you think would have been the easiest game plan to execute or buy today at the open? Yeah, I think it's just the two ways I just explained. You either needed to give it a lot of space early with not a lot of size, or wait for a signal. So that was the other thing you could have done, was wait for the signal. Again, like for example with Tesla that I still have up here, waiting for the inside 5 and up. From Eddie Webb, it's scary because my hometown is all local and regional banks. It's a drive to a big bank, and there are plenty of small towns like mine. Yeah, I mean, I would just say as a counterpoint to that you can do almost all of your banking without going to a bank these days if you set it up properly. It can be a little bit of a pain in the butt. From Joel, I'll be back in the VTF soon. Is Pat still diamond hands on pins? Last I saw, Pat still had some pins. I bought the dipping pins. That was one of the ones that I was in there for. Hope to see you in here again soon. From Lewis, I don't have a degree in economics, but it seems to me that when central banks raise interest rates, they are by doing so contributing to inflation. No, it's the opposite. When banks raise interest rates, it tightens financial conditions. So it pulls money out of the system. At the same time, they're also buying back their assets that they have or liabilities that they have, whatever the right way to phrase that would be. All the QE stuff that they were doing, all the direct buying, they're selling that stuff off. So that is also the opposite of inflationary. To crush inflation, it would appear to me that the government should buy back shares in the U.S. dollar, remove money from the system. Well, that's exactly what happens when you raise interest rates. Is it takes money out of the system, and you can see that if you go look at like M2 numbers. Can I go over my trades? Yeah, I was buying everything I could get my hands on. The one thing I wimped out on was Meta. I wimped out on buying Meta. It was on the list. I was like, I just bought so much stock and so many things that I decided not to buy Meta. And it's unfortunate because this would have been a nicely profitable one for me. What did I buy today? I bought everything. I bought a ton of Labu. I really started buying this Labu pre-market around 5. This was a pretty heavy buy. Continued to buy that one on the way down, sell it on the way up. Was buying Apple all the way down. Had some good buys in Apple. I bought Google at about $90. I bought Amazon a little early. It had a much better price than me. Amazon at $90. Was trading the heck out of this Roku. I had a great buy in Roku at $55 today, or just above $55. Traded the heck out of this S also. Was buying that one on the way down. SoFi, this one made me very nervous at one point off the open, just because it's a bank. But the reason why I stuck with SoFi aggressively today was because of the insider buy on Friday. The CEO came in and bought a ton of stock. I bought pins. I got a great buy in pins near lows. Stupid JD has been frustrating me. I was able to scoop up some JD beneath 40 and at 40 today, which is okay pricing for it. What else did I buy? I was buying Snap today. I bought everything that I'm in. I bought everything that I'm in that I bought except SIVB because I can't and because I probably wouldn't. But everything I'm in, I was coming in and buying stock today, and it worked out really well for me. All right, anybody else had anything for today? So otherwise, I guess I'll wrap it up. I think you guys know my thoughts. CPI tomorrow is going to be really important. I see a bunch of you guys watching the YouTube who haven't hit that thumbs up button yet, but 42 thumbs up, that's pretty good. That's pretty good. I'm trying to build that out. I love it. So I'll Kyle with the question. When you are buying pre-market, where are you planning to have your stop? Also, all those buy executions at the open, were those bids that you put in pre-market? Yeah, so that's what I was saying earlier. A lot of the pre-market buying, I guess Labu was a little bit heavier. Most of the pre-market buying that I was doing was lighter with a lot of space. So I didn't, to be totally honest with you, look, so I always have to balance, and I just try to be totally honest about it with you guys. I always have to balance what I think the textbook correct thing to do is for traders, because a lot of you guys are trying to learn from me, with what I actually do. And I always want to be honest that I don't actually always do what I always suggest that other traders do. And part of that goes back to, and this is why I don't always go over all of my specific trades and executions in very fine detail, is because I think that the right thing to do is not try to mimic how I trade, but try to take my ideas and make them your own. We're dealing with different account sizes, we're dealing with different risk tolerances, things like that. So for me, I was buying stock pre-market this morning without a stop loss, based on how I was viewing the market technicals, how extended we are, and kind of my thought process. And with that smaller amount of stock, I'll give that a lot of room. I'm viewing this market $10 plus extended. I want to be able to get in it, but I'm also saying to you guys, what did I say to you guys? I said in a real, sell-off scenario here with real panic, I think I said, 378 is possible. I think I said that in the morning meeting. Well, if I'm buying stuff at, SPY 381 equivalent, and I'm doing it light enough, I'm planning on holding that through that 378 and watching it. And again, I don't think this is the right thing for most people to do. I'm just being honest because you asked the question. I I'm letting my stop come to me after the fact. So it's not going to be that I'm not managing risk. It's not going to mean that I don't have a stop. It means I don't have my stop at the time in which I'm executing, which is the first thing that I teach new traders to never do. So if you're like a new trader in the business or you're dealing with a smaller account, in my opinion, what I just described that I did is something that you should never do. You could very easily get way too heavy, be down way too much, blow yourself up, put yourself in a really bad spot. So what you need to do more of is the second half of the game plan, right? First half of the game plan was buy small with a lot of space. And again, for me, that meant having my stop loss be found after the fact of being in it, which is, again, what I do not recommend to people. Or part 2 of the game plan was waiting for the signal to actually get really heavy off of. And when you do that, that comes with a stop loss. Like the Tesla that we went over for Sebastian, the inside 5 and up. You're using either the inside 5 low or the absolute pivot low as your stop loss. You know that when you're entering it. You know exactly what your risk is. It's defined. You can take more size on it, and that trade would have worked out great if anybody took it. But again, that's what I'm doing, and yeah, it's almost entirely liquidity providing. There was a little bit early this morning where I just took the offer on things that had tighter spreads, but it was almost entirely liquidity providing. All right, gang, look at that, 46 thumbs up. What's wrong with the rest of you guys? All right, have a great night, everybody. I think today was a great trading session. I'm personally trying to heal from a big wound here from Friday into today, and it's gonna take some time. But what am I telling myself? I'm telling myself what I already know. I know that I'm a really good trader. I know that I have an edge. I know that all I have to do is the right things consistently, and I will make money over time. So, I might be taking a massive, massive hit for me on this SIVB. It's going to take some time to recover from it, but I know that if I try to do something stupid, and I even looked at it real quick. I was like, if I just come in, it was this PACW, I think. Yeah, I was looking at PACW below 6. It was approaching 5. It's the low of the day. Wow, the low's 5. See, I can't be mad that I did. Oh, and it closed at 10. This is so okay. So you know what? This is a perfect example. And I would have made a lot of money today, and I'm so glad I didn't do it. So when this thing was at about $5, I said to myself, I'm not gonna say exactly how much stock of SIVB that I have or what the dollar value is, but I'm assuming that that's a 0, right? So whatever the dollar value is of the stock, which I will say is a 6-figure number, is going to be how much I lose on this thing if it's a 0. I'm looking at this PACW at $5 today, and I go, I should buy, and I wasn't going to do this because this is gambling, and I have no edge. This is how I'm not going to make my money back. I said to myself, I should buy this PACW at the same dollar amount that I have SIVB, and if it doubles and gets back to $10, which I think is likely, I in one shot will make my entire SIVB loss back. The flip side of that is if I did that at $5 and they halted it and they opened it at 0, then I would just double a really big 6-figure loss, right? And in hindsight here, had I actually done it, I would have made back my entire SIVB loss in it. But that's not how you trade successfully, guys. That is not how you trade successfully. That's not my edge. That is gambling. That's doubling down and hoping to get lucky. And you know what? It turns out as I look at this chart, that's why I'm laughing, I would have gotten lucky. I would have gotten lucky, and I would have gotten lucky intraday. I would have made the whole loss back. But it's not the right thing to do. That's not my edge. I know my edge in the market. I know what I can make on an average day, and I'm just going to consistently do it, and it's going to take me some time. It's going to take some real time, but I am very confident that in time I will be back to where I was at the beginning of last week from an account perspective and everything else. It's just going to take time. So anyway, I think that's a great final lesson on that note as I look at this stinking chart of PACW and go think about how I could have made my entire loss back in a shot. Not the right way to trade. Have a great night, everybody. I'll see you all tomorrow.